Today, we will talk about lease rates. A lease rate is the amount of money paid over a specified time period for the rental of an asset, such as real property or an automobile. The lease rate, the amount the lessor earns from allowing someone else to use their property, compensates them for not being able to use that property during the term of the lease. The meaning of lease rate depends on the context in which it is being used, namely what type of property is being leased. In commercial real estate, the lease rate is the cost to occupy the space, commonly stated as a dollar amount per square foot of space per year. The lease rate can also be stated in terms of dollars per month or dollars per year. The terms of the lease will spell out the time period that the lease rate applies for and may also spell out incremental increases in the lease rate over multi-year leases. To get a true idea of the cost of renting a space, the potential tenant will need to know if the lease is single, double, or triple net. A single net lease is a commercial real estate lease agreement in which the tenant agrees to pay property taxes in addition to rent. A double net lease is a rental agreement whereby the tenant agrees to cover the costs of two of the three primary property expenses, taxes, utilities, or insurance premiums. Finally, a triple net lease is a lease agreement on a property whereby the tenant or lessee promises to pay all the expenses of the property, including real estate taxes, building insurance, and maintenance. The question of when to lease equipment or space, rather than building or buying, is one that businesses struggle with. Generally speaking, the key factor is how long the leased property is expected to be in use. If the increased demand is expected to be long-term, then the upfront costs of ownership usually dwindle in comparison with the savings over time and the potential for appreciation in a commercial property. Some companies prefer to lease over the long term anyway, as it relieves the company from having to worry about non-core business issues like equipment and building maintenance. When it comes to cars and equipment, the leasing company essentially buys the car from the dealer and rents it to you. The lease payments include the lease rate factor, also called the money factor, that captures the financing element of car leases. In the case of commercial property, the building has been constructed as an investment with the hopes of bringing in tenants. There are only two entities in this transaction, and any compensation for the initial investment in the building is baked into the lease rate as part of the overall business plan. Here are three key takeaways. 1. A lease rate is an amount paid by the lessee to the lessor for use of an asset for a set period of time. 2. Lease rates are generally expressed as dollars per month, but they can also be stated as dollars per square foot of space per year, as is the case with commercial real estate. 3. The terms of the lease will spell out the time period that the lease rate applies for and may also spell out incremental increases in the lease rate over multi-year leases. Hope this would help. Thanks for watching.